Ladies and gentlemen, please welcome to the stage Dr. Helima Croft, Managing Director of Global Commodity Strategy at RBC Capital Markets and Atlantic Council Board Member. Please also welcome to the stage Amos Hochstein, Special Presidential Coordinator for Global Infrastructure and Energy Security at the U.S. Department of State.
Amos, thank you so much for your second appearance at the Global Energy Forum. You are a huge supporter of this think tank, and we're so grateful to have you here. So, Amos, it looks like we only have 20 minutes for this, so we're going to just dive right into this. There's been so much discussion at this conference about the challenges of critical minerals, how we need to source more supply, how we need the unique security challenges of critical minerals. Walk us through, sort of level set for us, what's the scale of the challenges as we think about meeting Paris climate goals?
First, it is always great to be back at the Energy Forum. Last year, I tested positive in the airport on the way, so I ended up in a...
We didn't tell anybody that, yes.
We did not say that at the time, but that's really why I appeared on a screen from my hotel room in Brussels. But it's great to be back here in person for many, many reasons. Look, I actually believe that this is the greatest challenge, not just for our ability to meet net zero goals, but it's actually one of those things that crosses over to being one of the most important challenges and national security risks overall, not just energy, but a national security risk for the United States and for large parts of the world. And the reason for that is because if we just continue as things are today, as they've been developing for the last 10 years, we'll be in a place where we have full control or significant control of critical minerals in the hands of very few. Right. And that's a great challenge.
Now, Amos, how does this differ from the security challenges of traditional hydrocarbons? And you mentioned concentration risk, but there's also this issue around China, which is, it's in the hydrocarbon challenge, but it also seems to be very, very pronounced when it comes to critical minerals.
Well, my view is that everybody always thinks about the hydrocarbon world of the 20th century, yes, and that we're now moving to this great new world of the green energy world, which is a better world in many ways, but that somehow that's going to solve the geopolitical challenges of the energy world. The way we're going right now, we're actually creating a carbon copy of the 20th century geopolitics of energy architecture and just putting it into the 21st century. Instead of having a small group of countries that control oil supply and perhaps refining, we're now going to create one or maybe a couple of countries that will control the entire supply chain for wind, solar, electric vehicles, chips. And if we do that, then the geopolitics of energy of the 1970s will be repeated in the 2030s and 2040s.
So Amos, can you just walk us through, I mean, where does it rank when you think of national security priorities for this administration? Where does it rank in terms of, when you go in to see President Biden, how concerned is he about critical minerals?
I think people don't always believe me, but he actually can talk more about critical minerals and the challenges of the critical minerals than many in our own government. He understands this challenge very personally. I've had many conversations with him about this. It's because if we want to create, and look, we're at a place we talk about this all the time in this conference, right? Dr. Sultan talked about it yesterday. We have to accelerate the investment in clean energy technology and in renewable energy. That creates a challenge because as you accelerate something more rapidly than the market would normally have developed, you have to make sure that you have the raw materials and the supply chain behind it. Right now, we may not. So to do that, suddenly there is a rush to buy and to acquire, from mining to processing and refining and assembly. And if you look at where that is right now, it's not in a good place for a well-diversified energy system.
Are there particular aspects of it that are especially acute? I think we've discussed graphite before as a particular challenge.
So if you look at what is the materials that are necessary for batteries or materials that are necessary for wind, and you break it down, and you look item by item, and suddenly you realize that graphite is mined in many different countries, right, but it's processed only in one country. And we're going to have 2 new processing facilities in the United States likely over the next couple of years, but that will supply a very small percentage of what, even just a small percentage of what the United States needs. And then look at lithium and who's owning the assets, who owns the mining, who owns the processing, who owns cobalt, who owns the mining, where is it going? Nickel, copper. Copper we need not just for batteries, we need it across, if you want to electrify everything, copper is really important. So all of that is right now concentrated in one country, in China. China controls somewhere between 60 and 100% of all the items that I just mentioned. So we have to, as we talk about accelerating the investment, it's not just about deployment of cells or of turbines and building the grid. We actually have to accelerate the investment that the rest of the world, this is not just about US versus China, it's about making sure that we have a diversified energy system. And if I'm not looking to have all the processing in the United States.
Right.
The IRA is definitely intended to build up our own capacities, but we need that around the world.
So let's dig into the IRA right now. Can we basically, we've had the IRA, this groundbreaking legislative, success for the Biden administration. How do you think about the IRA sort of delivering on, the development of this industry in the United States?
Well, you have Piedmont is an American company that's going to have lithium mining in South Carolina and processing in Tennessee. Same company has assets in Ghana to get for mining of lithium. We have multiple examples. Jervois from Australia is going to just announce that they're opening the first in many decades primary cobalt mine in the United States. Not as big as DRC, but it is a mine. But what I don't want is all of that cobalt's right now destined to leave the country, so because we don't have processing. So what IRA is doing is creating, if you look at a carrot and a stick to get companies to do things, IRA is all about the carrots. It's about what are the tax incentives and the grants and other financial incentives for companies to build the capacity that we need. But Helima, we can't, IRA is about the United States. This is a global issue. We want this to be built, whether it's lithium in Serbia or projects in Chile and Argentina and Australia. But it's not enough that they're built in those countries. Who owns them? And where are they going? And you have to look at the next level of the problem. If one country owns all the raw material and one country owns all the processed material, then eventually they get to decide where the battery is going to be built. And if they get to decide where the battery is built, then they get to decide perhaps where the car is built. And all of a sudden you have a real challenge where the auto industry, and we know auto industry moves where the costs are, right? That's how the US became a hub for European and Asian car manufacturers make their cars in the United States when it became cheaper to make them in the US for the US market. So that's the real challenge that we're facing.
Well, you've laid out this enormous challenge. What is the role of getting, obviously more financing? Like, how do you de-risk financing for this?
So we launched together at the G7, we launched something called the Partnership for Global Infrastructure and Investment, which the idea behind it is how do we pool resources from the US and the G7 members plus others and the MDBs to de-risk investment in these areas. And this is an extraordinarily difficult challenge because you have country risk, commodity risk, currency risk, and ESG risk. And that makes it very difficult. We're having initial successes now after several months of starting to be able to put together these kinds of packages that allow us to use the financial instruments that we have as governments, whether it's EXIM and DFC in the United States, or it's KfW in Germany, or it's in UK, et cetera, the EU, and of course Japan with JBIC. So but how do you figure out how to blend where they're used to de-risk it by taking the first loss or taking and putting that capital where it fits in the capital stack of the investment to make sure that we can incentivize the others. I'm not very optimistic that we're going to have significant Western financing of mining projects in certain countries around the world where they're not comfortable. But I think we're starting to see a success where we can find buyers into the mining side and incentivize processing and refining of those products in a number of countries. And Serbia is a very good example of that.
Do you have others you could talk about?
I have others that I will be able to talk about.
You'll be able to talk about. So we just attended the Future Minerals Forum in Riyadh, and one of the big issues that was brought up there was the challenge of getting financing in a rising rate environment. I mean, how much does that give you concern?
That's what I lose sleep about every night. How do I solve that problem? And we've had conversations. We've spent some time, the U.S. National Security Advisor and myself spent some time with some of the fund managers to understand their perspective of what does it take. We've traveled around to see how do we structure, what do we need to do? In other words, what can the US government or the G7 governments in combination do that would change the outlook of financial institutions, whether it's banks or it's private equity? What do we need to do that gets you over that hump? I think we have more information today. We're putting those deals together. We have some transactions that are in their final stages that will demonstrate that we can do this. But the challenge is enormous. And I think part of the challenge is that there's not enough attention to this challenge. So what I would say on the financial institutions, I think we have to find a different way to look at not just de-risk the investment, but we have to put in the risk to the final product. If I'm going to say I'm not going to invest in financing the mining or the processing, but I will invest in the final product, well, you're going to have to put a risk now on that final product because you're going to have to ask them, how are you going to guarantee your supply chain? What if you don't have it? And suddenly, I think if you have that outlook, then perhaps you say, okay, if I'm going to secure my investment in the final product, where it's the car or the product itself or other products, I have to now invest in the supply chain to make sure that it's there. And I think that's a mindset change that is slow, and because of the lack of understanding of the basic data of where the supply chain actually lives, everybody I give the numbers to always reacts with surprise, even if they are people who are heavily invested in the sector.
So Amos, I want to ask you, you recently took a trip to the DRC. When you think about, you have been in the seat for energy security for how many decades? I mean, you were at the State Department under President Obama, you were head of Bureau of Energy and National Resources. On a sort of, in your career, how much has the energy security portfolio that you've had, how much has it changed because of the critical minerals imperative? Like, does it change into where you're spending your time? Like, how does your day-to-day job change because of this?
I think it's remarkably, it's the same job with a different set of countries. Okay. And I started working on energy security in the 1990s. That ages me a little bit. I turned 50 last week. When I was on the Foreign Affairs Committee, actually working on completely other issues, and all of a sudden realizing that we in the United States didn't talk about energy and foreign policy, but every other country did. Right. Whether they were consumers and it affected their how much they subsidized energy and therefore a percentage of their GDP, or if they were the providers of energy and therefore it was a big portion of their income. And today, I see it as exactly the same thing so I'm in the DRC because they have 80% of cobalt in the world, they have significant copper resources, and they have really great lithium, very high quality lithium there as well. So they said to me, some folks there without naming names said, we're the Saudi Arabia of cobalt. That was the statement that was made to me by this individual. And I said, I wish you were. Because the Saudi Arabia of cobalt, or the Saudi Arabia of actual Saudi Arabia, has that resource, and look at what it's done for the country. Right. It's been able to turn the country around, develop it into the major powerhouse, economic powerhouse that it is today, with institutions and roads and bridges and hospitals and everything else. You've had cobalt for all these years. It's time to think about how do you manage these resources so that the more you put an effort on rooting out corruption and putting an emphasis on who are the workers and what their rights are, and taking care of the country and investing it back. That's part of the opportunity that now all of a sudden, after 10 years, the world is really paying attention. We want these products for all these things that we want. This is the opportunity for a whole new set of countries, if they decide that they want to be part of this economy, they have an opportunity to become the Saudi Arabia of cobalt or of lithium or of copper, of nickel, of graphite, whatever it is. But if we keep a concentrated market where all these countries are essentially production facilities on a highway to one country, they won't get that opportunity to develop and to expand their economies and to do what's right for their people. And the rest of the world will end up with a single supplier for the products that we need the most in order to create this net zero world that we're trying to advance.
You know, Amos, I want to drill a little bit deeper on this because, I mean, clearly the DRC has had, enormous challenges. I mean, think about it, was the world's worst war at one time. 5 million people reportedly died in that war. I mean, how do you solve for these enormous governance problems? I mean, the track record in terms of oil countries in sub-Saharan Africa, wasn't particularly great in the 90s and early 2000s. Think about Nigeria. I mean, how does Congo sort of break the research? I know, but it's an enormous opportunity. I mean,
so I said, a problem, look at it as an opportunity. That I want to have net zero world plus electric vehicles. But we also want to know that it was built in a certain way and coming from a certain, that the supply chain into it was, first of all, clean, so that we actually don't defeat the purpose, and that worker rights were respected while building these cars and the materials in it. So this is an opportunity for, as we are suddenly paying attention to what we drive and what we're going to consume and what kind of electricity we're going to have, now we can come and say, we want to make sure the countries that are producing it get their fair share too. And so don't allow companies that are going to come and bid in when you put out a tender that are not going to respect those basic principles. And it's remarkable, if you tell them you can't hire children and you have to have an actual living wage and you have to do all the things that the successful oil and gas countries have done that have developed their economies in a sustainable way, if we take those lessons learned and say, you have the opportunity, you can look at two ways. You could look at the resource curse countries who failed the resource curse test, or the ones that succeeded. And that's what we're sitting here in UAE.
Right.
This is the example that you can draw from. But I think it's incumbent upon us to say, we'll help you get there, but you have to want to. And the opportunity really is that while just a few years ago, 3-4 years ago, Western companies were leaving the mining of lithium and copper and so on, and now they all want back in. So require them to live by those standards. And don't feel like you have to take the one company that's going to give you perhaps what sounds like a sweetheart deal at the beginning, and that doesn't allow for development of your own economy.
How much, I mean, China, you could say, had a head start on the United States in sub-Saharan Africa. Did not put the same emphasis on governance, labor rights, environmental rights. How do you see, I mean, you've brought up the whole issue of China on processing, you've talked about the OPEC for one. How do we think about China's relationship with these key sources of supply?
I'll say about China and this issue the same exact thing I said in Europe in 2013, 14, 15 about Russia and gas. We are not here to say Russia should not supply gas to Europe. It should play in a competitive, diversified market according to basic, transparent rules of the game. If we had done that then, we probably would be in a different place today in Europe. That's the same message on China. We're not saying China shouldn't be part of this market. It should, it could, it is. And they're not leading the United States. They're leading the world. This is not an America versus China. It is not. This is about the rest of the world should not want to rely on one supplier. I don't know a single business that ever wants to rely on one supplier for all its products. So I think this is not about who's ahead, the US or China. This is about saying to the Chinese, we want what you want, which is to be in the business of accelerating investment into a renewable energy net zero world, but nobody should end up wanting to dominate that market and to the exclusion of everybody else. We will be in a healthier place if there are multiple locations around the world that build batteries or that do the refining and the processing. Not every country should have a whole ecosystem in that country, but we should have centers that can do this. And to do that, That's why the G7 took this initiative to pool our resources to do that through the PGII. That's what I think we're going to try to mobilize as much as possible. But there has to be a buy-in. And the buy-in has to be governments that are not necessarily what I've just said now would still be like, yeah, we get it, but I have bigger challenges to think about. I actually think this is the clear and present danger, because if you don't do something in the next 12, 24 months, the fate will be sealed
So
for the
you
next
really
20
have a
years.
very, very small window.
It's a very small window.
You see the urgency. You said President Biden sees the urgency of this. So when we meet back here this time next year, how do you think our conversation is going to look? I hope I get to do the interview. So, Fred, looking at you.
My hope is that the conversation that we have at this event next year, just as we come out of COP28, will be about reviewing the change in the direction of the supply chain. And I think we are going to be. I think we're going to be in a place where we're going to be able to discuss transactions that have taken place, both in the mining side and in the processing. And I think people sometimes think only about the mining side. The mining side is less important. The processing and the assembly and so on are critical. And I think we're going to be in a place to say we've made a dent and we've put ourselves in a trajectory. Not that we've made a meaningful, if you took up our percentages and 80% went down to only 78, almost we failed, but rather, what's the trajectory? What are we FIDing for these facilities? And I think that we'll be in a much better place next year. That's my hope. I hate saying hope, because hope is like, well, I hope so.
No,
it's the goal.
That's
what we're working towards.
We have 1 minute left, and you brought something up when I saw you at breakfast this morning I thought was such an important point in terms of talking about this issue of like just transition, equity, the sort of what happens with the digital development divide. I just think if you could sort of talk that through for us, because I was so struck by the sort of real issues around what could happen if you don't close it.
So I think the critical minerals and the digital divide, to me, are two parallels. They are remarkably similar, and the same challenge exists in both. If we don't do something about it on the energy side, then we are going really fast on this, on electrification and moving everything so quickly that if all these companies are saying, I'm not going to build a car that is an ICE car past 2035, and you have large parts of the world that don't have a sustainable grid for the baseload they have today, how do you suddenly convert all the cars? You don't. And all of a sudden, you're isolating countries out of the rest of the world's economy. So the divide between developed and developing suddenly widens significantly as a result of our own success. It goes back to what we talked about yesterday about how much money is going into clean energy implementation in developing countries. I think 27% today, expected to decline to 22%. The same thing's happening on the digital side. If you're still today we're going from 3G to 4G and kind of skipping 4 and going into 5G, while already the R&D onto 6G, which will be in 2027, 2028 deployment expectation. But 3 to 4 is different than 4 to 5. So 5G is a sea change of technological change. If we don't upgrade systems across Sub-Saharan Africa and Southeast Asia, South Asia, Central Asia, where we get to 5G quickly, we are going to condemn countries that are still in 3G. It's no longer, okay, it's a little bit slower, but rather, you're no longer able to connect to what the commercial world would look like. And that suddenly mobile banking and e-commerce becomes extremely difficult if you can't actually connect into the rest of the world. So we're on a path, both on digital connectivity as well as on the critical minerals and investment in renewable energy, that if we don't start spending the dollars more equally, it's not only that it's not fair to people who are born into countries that are lower income, but we're actually going to create a divide that is no longer bridgeable. And that's why we're starting to look at investments, and there I can tell you we've done some significant investments on 5G through Africell and DFC, and Exim Bank have done this, and we're working with our European counterparts so that, again, we don't have just one supplier, so it's not just one Huawei ZTE, but rather we have we have a healthy ecosystem that can invest into upgrading systems from 3G to 5G, and then making sure that those are reliable vendors that provide not only fast connectivity, but secure connectivity as well.
Amos says time's up. I want to thank you for another extraordinary conversation. What I always like when we have these conversations is, I mean, you have been incredibly prescient. You've told us we've got a 12 to 14-month window. I think we should take that incredibly seriously. Your track record on warning about Europe's dependence on Russian gas. I remember in September of 2020, right? You were the one, basically, I almost felt like a lone voice out there talking about the need to get as much gas as possible into Europe. We should have taken you more seriously then. I hope everyone, the sort of 12 to 14-month window, I hope we all understand the urgency of the challenge you've laid out. So thank you so much, Amos.
Thank you.